When do you start to think, okay, we may be getting past this, we may start to see the pain come in, and then we could start moving toward the other side where perhaps we end up with risk assets rallying once again and leaning into perhaps riskier credit?
Well, I actually think the next quarter we could see risk assets rally. Having been an investor through the financial crisis and looked at that seminal moment when Bear Stearns and JPMorgan combined under regulatory supervision, I might add, the next quarter was great for markets. Equities went up 15 to 20%, high yield credit spreads retraced a quarter, and then the bottom fell out. I think the ECB also raised rates in July 2008. You could have a feel-good period, and then the reality of the cumulative and lag catch up and slow the economy down. I actually think the data we're looking at it's irrelevant. It's not important. The data that's relevant is the data we're going to see in September.
So the saying, you can remain right, or you can't remain solvent as long as perhaps you may be right, that there is some sense that even if you have the correct idea later on, you have to get the now right. So do you lean into a risk rally that you know will be fleeting?
Absolutely not. I think if we've been taught anything this past month, you may see it coming, you may not, you don't know exactly where it's going to hit, but once it hits, whatever you own, you own. And you have to hope that you own the stuff that recovers. All the regional banks that their bond prices went down, the survivors went up, and the others are headed to restructuring 60, 40, maybe 30 cents on the dollar or lower.